Hello and welcome back to the Property and Lending Podcast. As always, we've got Fadi and Mark with us today. How are you, boys?
How you going?
Good, good. Yourself?
Yeah, good, good. Got a bit of a flu, but that's why I sound like Elmo.
Uh, all right. So today you and Mark didn't prepare anything, so we thought you'd just ask me questions, and
Yeah,
because we're super prepared on this podcast,
yeah,
um, and so I'll just throw it over to you. I think we'll discuss, I guess, the buying process and what the current market is like and what's going on, and pretty much any questions you have around purchasing property, and I'll see if I can make up some answers.
awesome. So today is something I've always wanted to do with you, especially in regards to us asking you questions in regards to the process of, what process that customers take in regards to buying a home once they've actually gained pre-approval from your broker or obviously from Mark and I. So we always have a lot of customers, and Mark can attest for this, where they're always calling. We spoke to the real estate agent, we bid this amount. And my favorite line is, oh, the real estate agent we spoke to today was so sweet. He was so nice to us. We really think we're going to get over the line. He's being real honest with us. And 2, 3 days later, oh, we can't stand him, or we can't stand her. And this
Yeah.
is what I always push, and especially when we've started working together, where I always push, whether you're buying an occupied or investment property, I'd rather know someone that is in place that knows what they're doing, can negotiate. And I think from a personal experience, you helped me out at a few auctions and negotiate the purchase of my home, where I'm just done with real estate agents. A lot of customers are finding out that it is a little bit more difficult to actually deal with them. And I guess we're going to use today, Mark and I are going to drill you in regards to the process, what you should be saying, what you shouldn't be saying, what you should be doing on auction day, how to prepare yourself, etc. So we'll start off with my favorite one. I think we're just discussing it. We're now seeing that real estate agents are now advertising prices instead of just, saying offers accepted. What's that all about? And is that more of an advantage for the customer or a disadvantage for the customer?
Yeah, definitely. Firstly, apologies to all the real estate agents that listen to our podcast. They're not all bad, man. No, so definitely we're seeing more listing prices come up on advertisements in Sydney. Anyway, outside of Sydney, it's still quite, Adelaide, Brisbane, where we're doing a lot of purchases for investors, is very competitive. So you're not seeing prices a lot of the time. But in Sydney, we are seeing prices come up. I've had personally, I don't know, a couple hundred real estate agents call me over the last few weeks, really, and asking if we've got clients for particular properties and whatnot. And I think it's a combination of, the interest rates going up and the media kind of sparking some fear into the population, into what's happening. And once the media starts talking negative about a market, then usually the majority of people kind of listen, because that's where they get most of the information from. And you see very quickly buyers pulling out, or sellers, trying to get rid of their properties before they think it's going to crash and whatnot. So a lot of people might think, okay, the market's not crashing or it's not dipping yet, but it might. And if interest rates keep going up, it might get worse, or my property might be worth less. So if I'm thinking of selling, I want to sell quicker. And so to get that process happening quicker and get quicker sales, agents are being a bit more clear, a bit more upfront with what you need to do to get a deal. So that's why we're seeing listing prices, again, more of a Sydney thing than outside of Sydney, but coming on. And with respect to Sydney as well, there are still areas in Sydney where you're not getting that. And I know a person who was asking me for some tips, and they were negotiating on a property, and it's just gone up and up and up because there's quite a bit of demand on the property in that particular location. It's still quite hot. But in general, we're seeing the listing prices because agents want to get deals done, and clients and their clients, the vendors, are kind of worried that if they don't sell it now, they might lose 20, 30, 50 grand if they wait 3, 6 months. So they want to get deals done quicker. So that's why we're seeing, some listing prices.
And I guess, does that make it easier for negotiation in regards to trying to negotiate the price from, what's listed, instead of, trying to offer a price and trying to guess what everyone else is offering the agent as well?
Yeah, of course. I mean, it's much easier if you're looking at a property and it says price guide 1 million, or offers between 1 million and 1,050,000. It's much easier to know where you need to be, as opposed to contact agent, or offers accepted. Because when it just says offers accepted, you have no idea. Like, you might offer that 1 million that they want. You don't know that they want 1 million, and then they might just come back to you and say, oh, you're well below. Well, you're too short, and you're thinking, okay, I've either really priced this wrong, or there's a lot of competition. You start to doubt yourself and your own research and whatnot. So it definitely makes it easier for buyers when there is a price there, because it's just, okay, hey agent, you said 1 million to 1,050,000. Here's 1,025,000, for example. Let's get a deal done. They might come and say, look, I need you at the top end. At least you know what kind of range you're in. Even if they come back, they're always going to come back and try and negotiate. That's their job. And so even if it's another 25 or whatnot, at least you've got some brackets. And if they come back at 1,050,000 and say we need more, now you think, okay, now you've gone over your own range. Maybe it's not worth it. Maybe you're bluffing. Maybe I'll walk away. So it's definitely easier for buyers, and it'll probably become even easier over the next few months and probably year. Not hugely easier, like it's not going to become a complete buyer's market, but it's definitely shifting from a strong seller's market to more of a balanced market, if not slightly buyer's market.
And I think we can see that with real estate agents returning phone calls back and are willing to negotiate a little bit more on the phone instead of, nah, we've got another person, boom. And I think that's like the biggest, I guess what I see as the biggest advantage for customers is that they're now in a position where they can actually negotiate or have that bit of a discussion with real estate agent of going back and forth instead of trying to do panic buys that we saw, pretty much all of last year. Yeah,
definitely a bit more power with the buyer, more stock coming on the market. And like, we're working on a client at the moment, buy property in Sydney, and we're looking out in the Shire, and property is probably valued at 1.6 million, and they wanted to go to auction. But all we did was ask the question, will you sell it prior to auction? Yes. The person selling the property is quite old, going to a retirement home, is a bit stressed about the auction process. So they're happy to get rid of that property prior. And we're actually trying to get a deal now at 1,475. So a significant amount lower than the valuation. But it's about asking the right questions and understanding what actually the vendors want, because it's not always a price game. That's it. Podcast over.
No. I was going to say, Mark, get in, because I've got a few more, so you better get in.
So I have a comment, not a rebuttal, but a discussion with a customer. I'll tell you what I say to them, and then I want to hear what you say. So a lot of customers come up and they tell me, hey, where do you think the market's going? And they always say, I'm going to keep waiting because I think it's going to keep going down. I think Sydney is going to keep going down. And I always ask them two questions. Number one, what are you waiting for you to know that we're at the bottom? Like, what exactly are you going to see in the news, in articles, who exactly is going to tell you that we are finally at the bottom? And number two, when we're at the bottom, if that's when you think that you're going to start talking to the broker, get the documents in order, have the pre-approval approved, and then start looking, and then sort of look deeply and understand what you're looking for, there's about a month or something. Depends how long you take to figure out what you're actually looking for. And by then, from what we know with the property market, it after it goes down, it kind of goes up like a V, like it's a very sharp increase sometimes. And by that time, if you spend that month or 2 months, you might have missed it. So what do you say when people are like, I'm going to wait till we hit the bottom?
Yeah, so we get asked that all the time, and now I'm getting asked more than ever before, obviously, because of what you just discussed and the media and whatnot. And like you rightly said, it is impossible. Like, there is no way to tell when the bottom of the market is at the time of the bottom, because if today's the bottom, we won't know today's the bottom until tomorrow, until the prices start moving back up. Yeah. So if you imagine a graph and it's plummeting or going down, whatever, and then it hits the bottom and then it comes back up, like you said, we're at that bottom. When you're there, if today's the bottom, we might think, hey, tomorrow might get lower. It might get lower, and you keep waiting and waiting, and then eventually you've missed this low, and then it starts to come back up. So it is. I tell clients, look, it's 100% impossible to. And if anyone tells you they can tell you exactly the day that it's going to bottom out, they're completely lying. It can't be done. So the first thing is, look, yeah, it's impossible to guess or to tell you when it is the bottom. And like you rightly said, once it starts to come back up, and the reason it comes up usually quite quickly and drastically is because people see, okay, hey, It is starting to go up. So more people buy because they say, okay, now it's going up. Let me get in before it goes like peaks or whatever, before I miss this low. And then lots of people buy, and very quickly you get more buyer action, less supply, and then the prices go up. So in terms of predicting the bottom, impossible, can't be done. In terms of what do we say regarding waiting, we always say the same thing. The right time to buy a property is when you're ready, right? And if today I'm ready, buy a property, because whether it's an owner occupier or whether it's an investment, property is a long-term game, right? And what happens in the short-term fluctuations is completely irrelevant. What happens over 12 months or 18 months when you're holding a property for 20 years or 25 years or 15 years is insignificant. You might have over those 20 years, whatever, 30, 40% growth, 50% growth, who knows, right? 100% growth, 200%. And what happened in that 12, 18 months, you're not even going to know about it. It's going to be so insignificant. So, time in the market is always better than timing the market. Yeah, you don't want to be buying property and then 6 months later or a year later, it's worth 100 grand less than you bought it. But if you're buying the correct areas, definitely from an investment perspective, if you're buying in the right areas, that's not going to happen anyway. And if you're buying for an owner occupier, really, you're there to live in a location and you're not so stressed about what's going to happen over the next 12, 18 months. And during that time you are waiting, generally what happens is you do nothing and you see the market shift, your pre-approval expires, you got to get another one. And then by the time you decide to do something, the market's probably run away. I have a lot of friends and a lot of people that we know who have said, I'm just waiting for the market to drop. I'm waiting for the market to drop. And it's been 6, 7, 8, 10 years and haven't purchased anything. Literally years. We're not talking months, we're talking years, because what happens is the market goes and they say, okay, well, the market's too hot now. I'll wait for it to come back down. And when it comes back down, I'm waiting for it to, bottom out. So those people who are always waiting tend to just procrastinate, usually scared to make a decision, and generally never buy. So our advice is, if you are ready and you're in a financial position to afford a mortgage, and obviously you guys, when you're sorting out the loan, there's a buffer rate, so they can definitely afford, even with interest rates rising and whatnot, they can pay for it. If you're in a position where you're fine to buy it, go for it. Because as well, if you find a property that you really like and it's an owner occupier, you might not find that same property for another year or 6 months. So what are you waiting for? So we're always on the train of, you can't predict the bottom. You will never know the bottom, and timing the market is way more important than timing the market. So that's our response to that question.
Awesome. You're another one?
No, you go.
I was going to say, so there's there's actually a few ways that, when the customer's looking to go look at purchasing a property, there's where you can put 0.25% deposit down and you get a 10-day cooling off period to get a valuation done, get your checks done, the pest control, get that conveyancer to look at it. You've then got something called the 66W, where it's going to auction. So if you were to show up to an auction, you can sign there and there and pay the 10% deposit. And the 66W also exists, like you were just saying previously, KM, where vendors are accepting bids before auction, but they're still they still need to be signing that 66W because it was going to auction either way. That's the way the real estate agents put it forward. Now, give us an explanation. All right, for example, the 0.25%, what's the disadvantages and advantages that you face in regards to negotiating for a customer? The 66W, I'm guessing, is probably the best advantage because that gives you more of a bargaining chip where, we can purchase it now, our customer's got a pre-approval now, etc. To give us your insight. And also, I've shown up to auction day for myself with you before. What do you do to prepare? What do customers do to prepare? I guess don't give away all your secrets, but give us a bit of a rundown of each one.
Yeah. So a couple parts to the question. So I guess the first part regarding deposit amounts and advantage and disadvantage of the 0.25%. So that's a Sydney thing again. So every state operates differently, or New South Wales thing. Every state operates differently. For example, in Adelaide, you don't put any deposit down, but your cooling off period is only 2 days. So after 2 days, you're paying the full deposit amount, whatever it's 10,000, 5,000, 20,000. But also in Adelaide, so everywhere across Australia, aside of Adelaide, when you get a contract of sale, your cooling off is attached to that. Right, so you get your contract, you sign it, your cooling off starts. In Adelaide, it's actually a separate form. You have a contract of sale, So your contract, you sign the contract, I agree to buy this property or whatnot. And then you have a separate form, which is called a Form 1. And your cooling off doesn't actually start till you receive your Form 1. And sometimes if it's an off-market property, so the agents have to order the Form 1. So sometimes, and very often when it's off-market, they don't have the Form 1 ready. So we might sign a contract today, and then 3 weeks later, you receive your Form 1. So your 2 days cooling off started 3 weeks later. So really you had 23 days of cooling off. And you don't pay anything till after that cooling off period. And in LA, because they know it's 2 days, sometimes they work with you. If you can't get the building and pest out for a few days, they hold that Form 1. So a bit different there. In Sydney, Brisbane is different as well. You get 5-day cooling off, but you can make your contract subject to finance and subject to building and pest. So your cooling off essentially is just literally to cool off and like make sure you're happy with your purchase and you didn't rush into something. Your cooling off period ends. If you got finance issues after 10 days or 14 days, you can pull out, or if there's building and pest problems, you can still pull out of the deal as well. In Sydney, with the 0.25%, so obviously you enter into a contract, you get a deal, and we say, okay, we're going to buy this property for $1 million. You pay your 0.25%. That's kind of like a holding deposit, saying, okay, we're holding this property for you. You're going into your cooling off period, do your checks. So you do your building and pest, or you could have done your building and pest before, but generally we'll try and do it during cooling off period, not to waste time during negotiation. And then also get your finances in order. So send the contract over to your broker, make sure you go from pre-approval to formal approval. You guys do what you need to do. That's what we do during the cooling off. After that, you obviously pay the remainder of the deposit, which is 5% or 10%.
And it's also important to mention that 0.25% deposit is actually non-refundable. So whether you go ahead with the deal or not, yeah,
correct. So how we like to operate, the quicker you can move, the quicker you can get pen to paper, you are going to be at an advantage compared to other buyers. So if Fadi and myself are negotiating on a property, and Mark's the agent, and Fadi, you say to Mark, hey, I'm going to do my building and pest, and then once we see what the results are, we'll get a deal, we'll negotiate, whatever. When I say to Mark, hey, let's sign a contract, I'll sort out my building and pest during cooling off period. I'm going to get that deal. You've got no chance. And the reason is Mark's saying, okay, this KM guy, he's going to sign a contract, he's going to get a deal, then he'll do the building and pest. And even if there is issues, he's already in the deal. It's very unlikely that they're going to completely pull out. If there's problems, we'll negotiate and we'll work through that. Whereas with Fadi, you might do a building and pest, there's major problems, you just walk away, I've lost a buyer. So the benefit of using your cooling off period and doing your due diligence during that is huge, because in the eyes of an agent or the vendor, you're more secure than someone that's not going to do that. When you're looking at 66Ws and waiving your cooling off period, it's something we saw obviously a quite common tactic by buyers during the last couple of years, where they're saying, hey, I don't want a cooling off period at all. I'll sign a 66W. Whether or not it was going to auction, waiving the cooling off period. That's quite dangerous, because if you haven't had time to go through your contract properly with your solicitor or conveyancer, you can find a lot of traps and problems in the contract. And obviously, if you haven't had a cooling off period, if you haven't had a building and pest inspection, whether it was prior to the cooling off period or during, you don't know what you're buying. The house might look immaculate, but under, subfloor, there's termites eating away, and then 3 months later, the whole building falls over. We will never ever buy a property without doing a cooling off period, without doing a building and pest inspection, for example. We'll always do one. Whether or not we sign a 66W, a building and pest is happening. If it is an auction property, and if we're signing a 66W, we will do the building and pest inspection before signing a contract. It is a must. So the major benefit, obviously, of a 66W is showing them, once you sign, you're paying your full 10% or 5% deposit. So that's a deal done. So in the eyes of the agent, you're a gem. You're a secure deal. They're going to sell it to you. They're happy with that deal. Whereas if you have a cooling off period and whatnot, you might pull out. So I guess from a seller's perspective, the ranking would be someone signing a 66W, and then someone doing their building and pest after that during cooling off, and then after that, someone who does their stuff before then tries to get a deal. That's kind of the ranking. From a buyer's perspective, it's obviously the other way around, because you want to get your stuff done before you commit. And so it's trying to find that middle ground to get the best deal.
Yeah.
The other part to your question was regarding auctions, correct?
Yeah.
From memory. Yeah. So with auctions again, once you sign, that's it. It's a done deal. You pay the deposit then and there on the day, and it's usually 10%. You can negotiate to have that lower. That's in Sydney as well, to have a lower deposit, but generally 5 or 10% is the accepted norm. So with an auction, you got to have all your stuff done prior, or your building and pests, and get the conveyancer to look over whatnot. The issue with an auction is the building and pest might come back with a lot of problems. And when it's a private treaty, you can negotiate with the vendor. Hey, this is going to cost me 20 grand to fix. Either fix it yourself, knock off 20 grand, whatever, you can come to a deal. When it's an auction property, the house could be falling over. You can't negotiate with the owner because it's going to auction, and everyone else may or may not have done a building and pest inspection. So they don't know. So the vendor has no inclination to give you any discounts or deals there. So it is important to do your checks prior to buying, again, because once you win at auction, that's it, it's done. Whilst you are at auction, we have some strategies and tips that we like to do to usually, I guess, win the auctions. We have a pretty good success rate at auction. Like, I think I was looking at it the other day, we're like 70% of auctions that we attend, we win. And there's a lot of tactics and a lot of different strategies that people use at auctions. A very common one is the guy that does nothing, the guy or girl that does nothing, and then comes in at the end with an offer. Doesn't work. Sometimes it works, but the majority of the time, you're not going to win, right? The other option is like you put in random bids here and there, or the other one is you start at this front and then you kind of wait and then you come back in later. You try and confuse people. All of these don't really work too well when you're versing someone who uses what we do, because we've taken control of the auction. The biggest thing when you're at an auction is controlling it. So I can't express how many auctions we go to where the auctioneer will start the auction and silence. You hear nothing. No one wants to start. No one wants to give away their cards. No one wants to, show how much they've got to spend. I love to start the auction. Auction starts, but before the guy has even finished speaking, the auctioneer, I've already put a bid in. What that does is it sets the tone for the auction. That I'm here and I'm here to win. Firstly, I like to stand right in the front, in front of everyone, so everyone can look at me and see how nice, good looking I am in my nice suit or my nice jumper or whatever. And I like to stand next to the auctioneer, or I want people to see me. And I want people to see me, and I'm bidding strong and I'm bidding hard, and this is my property. You've got no chance. This is the message I'm trying to convey during the auction. I like to use the auctioneer's name. So if Mark was the auctioneer, I put in a bid, thanks Mark. Mark, here's another 50 or here's another 10. Show some rapport with the auctioneer. It does two things. The auctioneer likes you, so he's more, he's going to try and get you a deal. Secondly, the other people watching are thinking, does this guy know the auctioneer? Have they done deals before? Like, am I already at a disadvantage? You want to put doubt in other people's minds. So using the auctioneer's name, getting up front, showing everyone that you're going to buy this property. The other thing is, actually, when you start auctions, there is a statistic, and I don't know the exact number, but it was very high. It was well above 70% that people who start the bidding usually win the auctions. But you can't just start and do nothing. So what we like to do at auctions is we bid hard, we bid fast. Before we start the auction, we know exactly what our limit is and not a dollar more, right? It is very, very important. And for us, it's quite easy because we have no emotion to the property. We're bidding on behalf of a client. So it's not our money. We get to a number, we're done. If it goes over, it goes over, right? You never really know. Sometimes auctions, people go nuts. They get very emotional and they keep bidding well past their budget. And you guys have probably gotten calls. Hey, I know you said my pre-approval was 1 million, but I just bought this property at auction for 1.2. So that happens all the time. And when it's not your money, it's a bit easier to do that. But I think it's very important you know your end point, and whatever, if you write it on your hand, write it on a paper, have your end point. I don't like my endpoints to be zeros or fives, so I don't like to end on, so 950,000 or 955,000, because likely someone else has got the same endpoint. And if they simply get to your endpoint before you and you're out and they have the same endpoint, you've lost for no reason. So I like to have random endpoints. So 957.5 or 957,700. So if they got to 955 first and that was their endpoint, you still got $2,000 to play with, and you're not kicking yourself over not knowing. But when we're bidding, it's like running up a mountain. This is like the analogy we use is we're running up a mountain, and the top of the mountain is our top of the budget, and we're running there as fast as we can. And once you get to the top of the mountain, you can't go anymore, because if you do, you fall off and you die, right? So we run into that mountain top. So we start the auction at $1 million. You've bid 1,000,010. As soon as you finish bidding, I've already outbid you. That does a couple things again. It's putting all the pressure on my opponents, on you. You're thinking, okay, you always have to think. You're always reacting. You're never in control. So if I've got $1 million, you've got $1 million, well, $1,020,000 straight away. And you're thinking, you look at your wife, you think about it. All right, 1,030,000, 1,040,000. You haven't even had a chance to breathe, and I've already put 10 grand on you. So the pressure is always on someone else. It shows again, I'm confident, and it shows people, this guy's crazy. He's going to pay whatever it takes to buy this property.
Let him have it.
Let him have it. And a lot of people will stop bidding well below their top budget because they think there's no point. And that obviously gives you the control and actually gets you a better deal a lot of the time. Sometimes it doesn't work. We don't win 100% of auctions because at the end of the day, like everyone, I have a limit and everyone's got a limit. And someone might just have a bigger limit. And they might also not give a stuff and they're going to pay whatever for it. And they don't care. They're going to pay no matter what. But when you take those few little steps and tactics and strategies into auctions, you usually come out successful. So yeah, in summary, go in confident, stand in the middle, stand at the front, use the auctioneer's name, show people that you're friendly with the auctioneer and you know him, and then bidding hard, bidding fast, and putting the pressure on other people. The other thing as well is sometimes we use random numbers to slow down the auction if it's moving too quick, right? Like I bid $1 million, you said $1,010,000, I'll go $1,017,000. 17 is random. Why would you use 17? But the auctioneer is so used to 10s, 5s, 20s, 25s, 50s. You threw a 7 or a 17 in there. He's got to kind of stop and think about it and restart. And it just slows down the auction sometimes. What you don't want as a buyer is you don't want the auction running so fast. You don't want someone else throwing 10 grand at you every 2 seconds or 20 grand at you. So you want it to slow down sometimes, make people think. You can also kind of look and understand other buyers and their, I guess, what's the word? You're looking at their posture, their demeanor, and you're trying to figure out when they're out, right? And it's very important to kind of know that, because what you don't want to get into is like a $1,000 bidding war. And anytime someone starts going into thousands, you're going in tens, and when they drop to fives, and when they drop to ones, they're pretty much done, right? You're bidding in ones for a reason because you've hit your limit and you've probably gone over it. The worst thing you can do when someone starts bidding in ones or twos or 500s is to do the same. So we've gone from $1 million to $1 million and 1.1 million, and now we're bidding in ones. What happens is you bid a 1, I put 1, and you're like, oh, it's just another 1, and it's just another 1, and you keep just putting another 1, and you end up another 10, but you're keeping your opponent in the game. You say 1, I hit you with 7 or 8. That's a big difference now, and you're thinking, okay, I'm done. Well, we can easily get to that 7 or 8 by just going 1, 1, 1, 1, 1, because 1 is nothing. 1 is easy. You're like, I've already spent 1,100,000. What's another grand? But you've gone 1. This guy's put another 8 grand. All right, I'm out. People might think, okay, but you may have bought it for another 3 or 4, correct? But you also might lose that deal over just a silly tactic. And then looking at people, if you see couples. Generally, what happens when you see a couple is the guy is bidding because we have egos, so we like to bid. But the wife or the girlfriend or whoever's with him knows the budget, and you get to that number, and when he goes over it, and you see the partner looking at him like, what? And all right, they've gone over because she's looking at him like, we didn't agree on that. What are you doing? And macho man, so I want to win the property. Same thing with kids, right? When you see families with kids, that's pretty dangerous because the guy looks down or the mum looks down and gets emotional. Oh, I want this for my kids, so they keep going up a little bit. But you got to kind of see the emotions, and when they're out, and when they're out, you got to hit them with a killer blow. None of this $1,000 bids. It doesn't work. Sorry, long answer.
That's what was needed. That was me, but That was like the main questions that we get asked by our customers, or what do we do? What do we say? And it's mainly around the whole negotiating with a real estate agent is probably, I think, the most challenging thing our customers face in regards to when they get their pre-approved. Like, what do we do? And that's why I always go back to the point of, man, ring a buyer's agent. Like, if you want to speak to someone because for me, the real estate agent's always going to be with the sellers, the vendors, which is fair enough. They're trying to get the highest price.
It's their job.
But the buyer's agent is there to get you the best price possible.
Yeah. So for sure, I mean, look, the selling agent's job is to get the sellers the best price, and you might not like them, but if you ever sell your property, you're going to love them, right? Because their job is to get you the most amount of money. So that's their job, and that's fine. And I think when we're negotiating, it's very important to know what their job is and who they work for. The agent is not on your side. The agent is not your friend, right? The agent wants to get the best price for their client, which is completely normal, fine. And if they're not doing their job. People don't negotiate daily as they're part of their jobs, as they're part of professions, right? You as a broker, you're probably not negotiating every day. Someone who's a builder, probably not. Someone who works in admin or is a teacher or in finance or, physio or health or whatever, you're not negotiating on a daily basis, right? So you've got someone who doesn't negotiate all day, every day versus someone who negotiates all day, every day. Who's going to win? The person that's negotiating all day, every day, right? They know what they're doing. They know how to talk. They know what to push, like what buttons to push, when not to push, things like that. So more often than not, sales agents win. But really, when it comes to negotiation, people go into negotiation thinking it's war, thinking this is a fight. I have to get the lowest and you have to get the highest and we have to fight and whatnot. It's not. Negotiation is really about getting a win-win, right? If I can win, you can win, and everyone's happy, let's do a deal. And that's how I approach most of my negotiations. The first question I ask the agent is, hey, mate, interested in this property. What price do I buy this property at right now? Right. And again, it comes back to speed, and it comes back to being ready. And if you don't have a pre-approval, you're not ready. And if you don't have your conveyancer looking at the contract or the building and pest in line, you're not ready. You have to be ready. And when I can show an agent that I'm willing to put pen to paper in the next 5 minutes, they start to get excited. They start frothing, right? Like, oh, I can make a sale, I can make commission, let's do a deal. So the first question I always ask is, what do I buy this property at right now? Usually you get the answer, right? Usually when they say right now, they don't want to muck around. Okay, this guy's serious, he's ready, pre-approval's in line, they give you a number. No worries, I'll get back to you, I'll speak to my clients. You do your building and pest, so you speak to your clients, you come back to the guy and say, listen, I think that's fair. I don't think you've overpriced it or whatnot. You want the agent on your side. You don't want to fight the agent, because if you start arguing with the agent, why would they sell it to you, right? So you want them on your side. You crack a couple of jokes, get them laughing, whatnot. And it's literally building relationships. And you say, mate, that's a fair value. I'm a bit stretched at that price. You think we can come down a little bit to this price? Let me know what their thoughts are. And it's just that dialogue of trying to get a win-win, and it's not a fight. Obviously, because we do this daily, we have a lot of relationships, and a lot of our conversations now are, hey, Agent X, what's the best price on this? Or what are they after? Get a deal now. Comes back, tells me a number. I come back, say, hey, I needed 10 grand off or 20 grand off, or look, this is my budget and it's below your price. Can we get it done? What's the best price? And because of those relationships, deals get done very quick. So it is obviously, look, if me and you, Fadi, are going for a property, the same property, and I know the agent, I might offer less and still win. Simply because the agent knows I'm not buying one property off him. I'm buying 30 or 40 properties off him over the next 6 months, for example. So relationships are very important, but when you're going into negotiation, it's not a war. It's, hey, what do you guys want? This is what we have. How can everyone be happy? And when you approach it like that, in a bit less, stressed environment, a bit more calm, relaxed, usually you get better deals. But the definite key to a negotiation is speed. Speed is king. The quicker you can show that you're ready to buy, the more serious you're taken and the more wiggle room you have.
I think also adding to that, like the importance of the relationship, if you're arguing over the last 5-10 grand, the real estate agent's commission is negligible after that. Like it's not going to make or break. So if you do have a good relationship, like what KM's saying, or you do have a buyer's agent who has a better relationship than any individual can because they deal with him much more often and they're giving him a lot more business, then you absolutely will get a better deal.
Yeah.
I think the other thing I was going to say is I was just having conversation every time we give a pre-approval to a first-home buyer, it sort of has the same disclaimer at the end. We say that the bank is going to give you, in this case today, it was a first-home buyer. So the bank's approval is for 95% of either the contract price or the property value from the valuation that's going to come in through the bank, whichever is lower. Their first question is, how do I know the property value? And then what I tell them is, go talk to First Brick. So I think the other biggest advantage of a buyer's agent like yourself is that people, when there's a shortfall between the valuation and the contract price, it could kill the deal. And if it happens on a 66W when you can't pull out, or you've already put 10% down of like $1 million property, you've put 100 grand down and you don't want to pull out, but now the shortfall is like 30 grand because you haven't really done your research and didn't know the market as well as you could have, it could cost you a lot of money. So save your money and go to a buyer's agent.
Yeah, definitely. And you know, like part of our process is valuing every single property we look at. So our process involves data and property searching and whatnot, but a big part of it is analyzing the property. And we know what the property is worth. And, you know, we discuss with our client, okay, the property is worth this much. This is what we're willing to spend. We never buy a property more than it's worth, ever. And that's why we don't really have ever, you know, valuation issues or whatnot. The other thing, just quickly with negotiation, is especially if it's an investment property, don't be afraid to walk away. Like if it hits your numbers and it's gone past your budget or past where it makes sense to buy it for investment, thank you to the agent. You know, and always in good conversation, because they might have another property that you want to buy. Thank you, but it just doesn't make sense for us at this price, and walk away. And then you'll see if they come back. Okay, they were bluffing. They were trying to get more money. If they don't come back, they were being legit. They did have another buyer, and good for them. You know, there is always another property for sale. I know it can get frustrating when you do this, because again, most people only buy 1 or 2 properties in their entire life, right? So the process is very different, very scary and whatnot, and it might be a bit disheartening. You've been looking for so long, you finally found the perfect property, and it goes over. I mean, you got to go again.
You've just described it.
Yeah, but the flip side to that is going over value. Even like what Mark said, is having valuation issues, and it end up costing you a lot more than you thought it was going to cost you, and then people get into big trouble with that.
Yeah.
Anything else?
I think we can just, I guess we can just end it on the note, like pretty much like what Mark was saying in regards to seeing a buyer's agent going to see First Brick. It honestly just takes care of, for me personally, when I've used the services, it takes out of a lot of the crap I don't want to deal with. Also, I think, for example, if the place, you know, I purchased, there was a few different prices out there that we didn't know which one we're going to bid for until, again, we spoke to a buyer's agency, yourself, and you came back with the best possible price for us. Where even on the same strip, we speak to other people in the neighborhood, like, oh, we got it for a little bit extra than you did. It all comes down to that relationship, the negotiation, and how much you think the property is worth as well. And at the same time, I'd rather be paying an upfront fee to save a couple of thousands. Like, you can be saving between $30,000 to $100,000 sometimes in regards to purchasing that price, because I just don't know what I'm doing. I'm not a buyer's agent. I'm not in the property. I take care of loans, but when it comes to another profession, it's just a lot more easier for myself.
And it could, it saves a lot more than that as well. Like if the shortfall is 30 grand over, like you already saved $30,000 from like.
Yeah, I think as well, like with your property, Fadi, like what was interesting was we bought a property on the same street as yours for someone else, and a very, very similar property, and at a certain price. Even when you spoke to me and the agent had quoted you a higher price, and obviously I bought a very similar property of the same agent. We just one quick conversation. I was like, hey, what are you talking about? We just bought this one for this. And then the deal was done pretty much. So again, it comes back, you know, that's it shows the relationships that you can, how a relationship can benefit a deal. And then the other thing, like when it comes to investments, saving money is obviously part of our job. But I think the biggest thing, and not being overvalued as well, is big. But I think the biggest thing with us as well is that data analysis. Like if it's an investment property, not only are you saving money, but I think more importantly is you're in the right spots to make money. because a lot of conversations I have are surrounding how much can you save, or what are we going to save off this deal or this deal. And look, you could save. I could save money off. We could save 100 grand off a property for you and buy in the wrong spot, and then you haven't made any money over the next 10 years, right? Or we can buy in the right locations, save a bit of money, but actually make 2, 3, 4, 500 grand and continuously make money, you know, over the next 5 to 30 years. So I think getting the right location and buying the right assets is a huge part that people kind of forget. People always think, how much can I save? Can I save? Can I save? I think we should shift that mentality to how much can I make? Let's actually make money, you know? But definitely, definitely that's a big part of why people use us.
It's always a good idea to remember that the contracts that you're signing in regards to the mortgages are over 30 years. So it's not a 3 or 2 year investment. You're looking at a 30-year investment.
At least, you know.
Yeah.
Well, a lot of our property portfolio plans that we build with our clients for investors, we never sell. You know, you're buying these, you're holding these forever. You might sell one to use the profits to pay off debt on the other ones, but you're just growing your asset base continuously. You might pass those off later to family members or whatnot. But the longer you hold it, the better timing the market over timing the market and compound, right? Like the longer you hold properties, the more money you make because of compound interest and compound growth. So there's so many factors to it. And again, it comes, you know, that short-term fluctuations completely irrelevant. If you ask any of your parents who own property or whatever, who have owned property for 15, 20 years, and you ask them, well, do you remember when you bought it, like the first year it was kind of a little bit up and down? They don't know what you're talking about. They bought it for 200, it's worth 2 million. Like they don't know what happened in those 6 months. So definitely do your research and then picking the right locations and just not waiting, because people who wait don't buy. They're always waiting. We see it all the time. Nothing else?
Perfect.
Well,
Nothing
thank you, gentlemen, for the plugged episode.
Yeah.
Next week we'll plug the power loans. Again, we'll ask more finance, property.
So I get a conveyancer or another accountant on next week, or a financial planner. I reckon it'll be very interesting to bring a conveyancer on that actually looks at the contract to sales, because I know between Mark and I, we have all of us have the same, pretty much the conveyancer is the go-to person in regards to reading contracts. And even the one that she looked at through recently for me, she came back with like maybe 18 or 19 amendments. And it's just stuff that you and I would miss. Customers don't know. I don't know. But when you speak to her, she'd be like, this is just normal. This is just normal stuff they put in the contract that, you know, not everyday people know about, but we're looking to amend it. Yeah. 18 amendments. So that contract, like you were saying before, is so important to look at, especially in regards to the 66W, you're the 0.25% deposit. And obviously, if we're leading up to an auction, you've got access to that contract to sell to give the conveyancer as well.
Yeah. I think, that'd be a good episode. And if, I guess, like, if anyone's got questions, send it in. We could do a Q&A episode or something. But yeah. Anyway, time for breakfast.
Awesome.
Thanks, boys. We'll see you next week.
Perfect.
Thank you.
Bye.